All right, so I mentioned on the opening part of the show that I've had a lot of questions about investing and what stocks would benefit from the Biden's infrastructure spending that's coming up. And it brings the question to mind, what's already baked in, question mark. Is it already baked in when you have a valuation of the market versus the GDP at historic levels, some 190% of GDP? I mean, it's just absolutely mind-boggling how overvalued this market is. And of course, it keeps getting more overvalued as they keep moving up, and there's an anticipation of strong growth, and that's why the stocks are going up. And they're trying to buy things that are recovery stocks and things that are value stocks that likely will move up. And of course, there are the benefits that you'll see in industrials or energies or even the utilities infrastructure stocks that will do well based on the money that the government is about to spread like fairy dust all over the whole economy. So it's a hard question to answer, whether or not it's already baked in. And then there's always the question of, are they buying the rumor, and then will they actually sell the news when that comes out? At some point, they're going to say what more can happen as far as spending, and there's always the chances that the more centric Democrats will block some of these things, like Joe Manchin, who could get in the way of some. And he says if there's no way he would allow anything to pass as far as excessive infrastructure spending if it didn't include Democrats, if it didn't include Republicans in the bill also. So we never know where that's all going to go. So you're almost getting to where it's, a near a lose-lose situation for the market, as if they can't pass it, the market goes down. And if they do pass it, well, it could be sell the news. So can the market go from 4,000 to 4,500? Well, I suppose anything could happen in this crazy world, but it's not likely. So a lot is getting priced in right now. So you have to consider, is it late to be making that kind of play? And that's how I answer some of these people. But still, I want you to be able to have an understanding of the market condition and how you really know. And to do that, you really need to focus on some broad measure of the infrastructure spending. Money flowing in will raise earnings, and with thousands of stocks already having benefited, is it, to 1 or 2 or 5% more? It could get up on the upside. You could really get into some traps in here. So I want you to really be able to focus on some broader measure. For example, if you picked out a handful of stocks that could do well in the next 5 or 10 years, you could really get run over in the meantime by this overbought situation. For example, Caterpillar, which is a great infrastructure stock, has gone from a low of 90 to 230 in this move. So it's been massive. And when you look at the material stocks and how much they're soaring, and stocks like U.S. Steel exploding to the upside with massive percentage gains, and of course they lose money, and it's hard to, you don't know if they're ever going to make money again. Well, maybe there's a better way to invest and a better way to track it, and we're going to look at that. So that was kind of a long introduction into what I'm going to show you right now. But I think these are all valuable questions. At the same time, I'm going to do a little teaching around cycle analysis, which is the core of the analysis that we bring. And it's always involved in momentum analysis and picking out the important support and resistance levels. And we have a lot of ways that we do this. So I want you to look at this chart of this important ETF. So again, if you're going to invest in infrastructure, maybe you want to do it in a much broader way. This is the U.S. Infrastructure ETF, IFRA. This is the iShares Trust ETF. This is an example of cycle analysis. So just for the people that are new in here, on the bottom what you see are cycle brackets, these right over here. And what they show you is the money flow. In other words, when money is moving in and when money is moving out. And the ideal cycle would move up half the time and then fall half the time. And I'll show you that on the daily chart in a moment. And then when you get into a trend, or when you get into breakdowns of trends or breakouts, you get into significant moves. Here's an example of a positive cycle, and a positive cycle that broke down under what we call a VTL. This is the valid trend line, which comes off of the individual lows or peaks from cycles. And once it broke under there, of course, we got into that massive deleveraging back around the COVID panic, and you had that huge break. This is called a basing cycle, where it comes up sharply, it comes down and hits the support zone, and then completes based on the timing. These vertical lines are the actual lows, as you can see in each of these cycles, and then the brackets show you the average cycle distance. You can see here this cycle bottom comes perfectly in line with where this projected average cycle low would be, and here is the new cycle that we're in. So let's just take a look at these last couple of cycles right in here, and you will see that what we're projecting based on this is that that there will be a continuation. Now we look at momentum, which is always key. This momentum indicator right here is telling you momentum on the weekly chart, and we're looking at a 10-year weekly, is still positive. You can see in here this VTL connecting these bottoms, pointing to the upside. So if the VTL would break, it would be the first warning. And you can see the VTL is rising because that really kind of matches the trend that you see in here. So that would be the first sign. If it broke and then got some support right over here in the support zone, it would still be okay. It would have to break under this low over here to be negative. And it's quite a ways from that right now, very significant percentage away. So now what we're projecting, and remember we were projecting the stock market to continue rally into the spring, is to get up towards the fib extension target zone. This fib extension target zone was built off of this cycle, and you could see it came right up and touched the bottom of it, and then came down and corrected only to the 23%. This is what's called a right-hand translation, a very swamped cycle that is swamped by the upward momentum as money flow continues in here strongly, and then it moves up again. So the target right over here is around 37 on the upside. And this points out to this April-May period where it's likely to continue to the plus side. So as long as you're looking at infrastructure, this gives you a very, very good sense that the market still looks okay, the infrastructure stocks still look okay, and this particular ETF tracks about 150 or so of those stocks, mixing it up between industrials and energies and materials and utilities and things that will benefit from all of the money that the government will spend. Now let's take a look at it on a daily basis, because we're going to continue this important lesson. And you can see in here now we have a little bit more information, because what I want you to see is, and we'll continue this cycle analysis lesson also, are the momentum conditions which have been very strong, and the cyclical formations. You can see in here the period in the cycles right there and how they line up. And you can see that they continue to be positive. This one was a neutral cycle right here, but the rest of them positive. This is the slim ribbon right in here, which is one of the best momentum indicators you will ever experience. When it's all lined up on the upside, the probabilities are high that it's continue rallying. Here you could see on the bottom what's known as the slim ribbon PO. This is the signal indicator for the slim ribbon and tells you when conditions remain extremely strong or extremely weak. In this case, there really is, through this whole period back through last October, there was no negative periods at all. It turned neutral during some corrections and then continued to give you these positive signals. Again, we're looking at this target zone here. This is 36. This right over here is 36.77, and this is from the weekly, up around 37 even. And we still continue on the upside. Now let's talk a little bit more about cycle analysis. These are the cycle brackets, as I said, on the bottom. Now, if the cycles were neutral, each of them would go up half the time, down half the time. So it would be kind of this equal channel that I put in there, you could see. But if you tip the channel upward, essentially, And I'm just going to grab this and just make it a little bit bigger so that you can see. So there's kind of the idealized look. But if you tipped it upward, you can see how it then affects the cycles, as you can see that it's done up above. So this shows you the upward momentum in there and how it actually affects the cycle patterns. And this is the key to understanding money flow as we look at this, as this takes the ideal pattern cycles and then moves them into rising trending cycles, as you see right there. And each of these basically positive, neutral, positive, positive, and then very likely will take out the next high. Each of these higher high, higher high, higher high, higher high, all of those, and likely to go to a higher high. If this pattern changes, in other words, you either don't make a higher high or you then break down and make a lower low, and in this case, it would need to get underneath this last low right over here, and then you'd have a breakdown underneath that level. Then that would tell you that the infrastructure investing is over. And that's the key to this analysis, is looking at the multiple time frames that you see right in here, as I just want to blow this up somewhat, that you can see that rising here on the weekly, rising here on the daily very, very clearly, and this upward trend, the market will tell you when that's gone. And right now it's telling you that the infrastructure spending is still strongly in place as we continue to move on the upside. For our members, you can check with me on this. If you don't have this analysis, our level 4 members can request this from us, and I will send you these Thinkorswim charts to put up on your platform. That's only for level 4 that we provide that. So again, I think this is great information about this question about infrastructure spending. I believe the market is overpriced. I believe that there are a lot of things showing cracks. But while you have this spending going on in these stock sectors, in these stock sectors that are driving this index, the market is still going to be in good shape. So I think that's very, very important analysis, and it really answers this question about investing for infrastructure spending. Should you still do it, and how do you do it? Well, I think you need to do it diversified using an index like this. There are other infrastructure spending indexes, but I just happened to pick this one to bring to you. So that is a look at what I think is very, very important analysis.